Everybody to this week's swing trading live stream. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about pretty much how to get started with swing trading, stocks that we're holding, stocks that we took positions with. So, guys, I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe, and today is the last day for the 50% off sale with our amazing swing trading masterclass. It's our community, it's our school where I teach people my approach with trading. It's not a get rich quick, it's not alerts or anything like that. This is strategies that I've used for over 6 years to become a full-time trader in the stock market. So check it out down below, and you guys can use code Halloween. Today's the last day for that code. So make sure you guys check that out here. All right, we just had a first question here. So Star asked, how do you handle risk management like position sizing as your portfolio grew bigger? So I always keep it, percentage based. So now, I'll take a trade, let's just say, I have about 100,000 in my account. I'll take a $10,000 trade. I try to divvy it up with like $10,000 increments. Just because I feel like that's what works well for me. It carries, if the stock squeezes up, then you have, you have a good amount of shares to make money off it. And obviously I still keep my stop loss about 2% from. On most trades, about 2% from the current price. But yeah, great question. So but make sure you guys check out our course, code Halloween for 50% off, and let's get started here. So we actually did take three positions this morning here. One of them, very, very small trade. Like I said, with most of my stocks, it's about a $10,000 investment that I put in for a trade. With KFY here, we hopped in. Now we only went in about $6,500 on this trade. So the reason why I did that is because we've seen a lot of volatility from the general market. The S&P 500 saw a 1.5% sell-off yesterday. But I remember last stream I asked about a lot of the stocks on the watch list about having a bad RSI. I had to leave early, so I didn't hear you answer. Okay, so for that question, the RSI, what I want to always do is just because a stock like this, just because a stock has a high RSI as of right now, right? It's at a 45. I think that it's an indicator, right? So you don't have to purely make a trade based off the RSI. One of the things that I think is important is to look at like the general momentum inside of the stock with the RSI. So looking at, let's see, the past upward trend for here. So, what you could do is draw a trend literally on the RSI like that. You can see, so as long as the RSI follows that trend, I think that's better off in my opinion. And you can still see the possible, breakout. Like you can use the RSI as more of we've seen recent buying pressure at a 40 or 36. This could be a possible entry. Just because a RSI is higher doesn't mean that the stock necessarily isn't a buy. It's more of just an indicator, something you want to look at, because sometimes what happens is a stock, if a stock squeezes up and goes from like $20 to $100, the RSI is going to be at like a 90, and then from 100 to like 50, the RSI could only drop a little bit, but I just think it's more of a way where you should look at it as like an indicator, not making trades purely off that, if that makes sense. And we'll talk about it when we look at some stocks here with some opportunity here. But this one here, we'll see here. The stock had this good upward trend, and looking at this here, it has heavy support on it. So we decided to take a trade here, today. And the thought process I have with this stock here is, we entered on this trend line at about $70 and about 80 cents here on this trend line. Now, the thought process I had here was entering here, keeping our stop loss below this trend line about 1.5%. So about almost about there for a possible breakup to about here. So that's a pretty good risk and reward, right? It's about 5-1. So with this type of trade, I really don't have to go super heavy in on it, because if it does establish this trend, the risk and reward is very good, where I could get a really good move back up to some highs. And like I said, it's a 5-1 risk and reward there. So, looking at this here, you can see, that good trend line, the heavy support. I think support is more important than the RSI, in my opinion. You can see hitting buying pressure, buying pressure, buying pressure, buying pressure. Recently hit it. We're having that good move coming soon. Hopefully the next move here, what we see is a breakout. So hopefully Monday or even later today, we could get a little bit of some buying pressure and the stock could squeeze up above it. That's the thought process I had with it, where it could rally on this trend line. So something like that is really good here, because we have that trend line and we also have these moving average lines. Let's remove some of these here. So you can see these moving average lines also act as support. So the more supports you have in your position, the better off you are going to be here. So what do you think about PGR? PGR here, Progressive. Stock sold off, looks pretty good here. 90-day moving average line support. Hourly looks pretty decent here, right? Popped up above these moving average lines. It's actually not too shabby, right? You can see forming a little trend line like that. You can see this long wick represents buying pressure, so we know there's buyers down here. So personally, what I would do is enter stop loss below, that 240, that low wick down there, which would be about 2%, for a possible break up to some resistance levels, which is in between, it's about in here. So now the risk and reward, so we'll just go about there, 2.5. So it's about a 3 to 2.5, not too bad. And obviously, if you set your stops a little tighter, that's going to go up. So that would be the trade that I would do. And this one here looks good. The RSI is at a 41. Yeah, this one here could be a good move. What was the earnings like? So the earnings is why we got sell off, but on that earnings date, it looks like it just dipped down a little. And often any action in the market is often an overreaction. So I do think this could be a nice little move here, and entering here. Possible push up to those resistance levels. We'll draw it out up here too. We could keep our stop below about here. Yeah, it's about a 2.5 to 3. Not too bad. IT or IRT here. IRT stock popped up, hit that 90-day moving average line. Hey Carter, I'm tuning in from the Discord class. Welcome. I appreciate you. I appreciate you coming in. If you have any questions, feel free to ask. Do you only use the 1 day and hour? I will say about 80% of the time I will only use those two. There will be times where I will look at the weekly, the quarterly. I will look at them, but I won't make a trade off that. I have in the past. I'm not sure if you guys remember when I took a really big position or a pretty large position actually with Disney. And and we'll come back to this because I do think this is important here. So we took a pretty heavy position a little while ago on the quarterly chart, which was one of the first times I actually ever did that because of this, right? The stock sold off, hit that 90-day moving average line, right? It hit it and it had that good move. Looking at, the daily here, you can see, let's zoom out here. Let's see here. So you can see it sold off. Wait, where was this? This was back in here. Yeah, so it's sold off down below. We got in right on this pop above these lines here. So the second, it's very similar to what we normally will do. But you can see it popped up above this, and then this is where we kind of entered. We held this position for, I think it was there for a good amount of time. But what was it? IRT. So I'm going through the course lectures. I don't think I've gotten there yet, but do you cover how to add the RSI to the chart? And yes, I do. I do talk about it. It's very, very simple on how you can do that. If you use Moomoo, you just got to go. There's a couple ways you can go to this chart management tool, manage indicators, and they'll have some off to the here, and you can add EMA. They'll have more. I deleted some. You also can click manage indicators down here, and you can add some right here. You can actually type those in. But yeah, those are two easy ways to add that. But IRT here, let's pull that back up. Somebody asked, should I hold DJT? So that is the Trump Media stock. That stock is for, we'll pull it up here, but with that stock, what I've seen out of it, it's a risky growth play, right? DJT is a highly speculative growth stock that carries potential, right? If Trump wins the presidency, obviously I do think we'll see a huge correlation with that stock squeezing up. If he loses, the stock's going to sell off. For me, it's very similar to like holding a stock through an earnings. I'm not going to get in on a position like that. Not saying you can't make any money from it, but for me, I'm trying to maximize my reward and limit my risk, and that just adds a little more risk to it than for me. I bought shares a little bit ago now, and yeah, I mean, I bought some shares, and we're holding. I don't know. I'm not sure what I'm gonna do. All right, IRT here. Looking at this here, the issue is this good sell-off here, which sell-off does bring opportunities. So maybe like a support play at like 1875. I'm having trouble deciding what kind of trailing stop approach suits me. I don't like having to bring up the stop every day. Yeah, I mean, it does, not suck, but it having a trailing stop, you don't have to have a trailing stop when you take a trade. I think there's pros to each, right? There's several ways you guys can exit a trade. So like, with a stock that we recently entered with Costco, we got in because it's a very, very blue chip stock. I can easily turn this and hold for my long-term portfolio. Hit that 90-day moving average line, got a little buying pressure here. So, the thought now, there's two approaches. If I'm looking to swing trade this, right, I could do that trailing stop where I continue to move a stop loss up and up and up as the stock sells off. You also can just do a pure trend line, so no matter what, if this stock hits this price, you'll take your profit, right? So the issue is if the stock squeezes out more, you could miss a move. And then just keeping your stop below it, just like how we draw it out, right? Just like how we draw it out. So no matter what, you just put your stop like this and you just let it ride. You let it ride. If it dips down below the stop, you just get out of the position. The issue is if you're up on your money and it almost hits your target price and you don't take profit, you could miss out on money. I do think, with anything though, you just gotta figure out what works well for you. I did post a video on ways to exit a trade, different ways, so you could check out that as well. But yeah, I mean, other than just having trailing a basic stop loss, you could even do those are like the main ones that I always do. But yeah, this is a stock that we bought, Costco, huge blue chip stock. I don't have to worry about it closing their doors anytime soon. We also took a trade on Apple here. Apple, I do think with the upcoming holidays, people are going to be wanting new products like iPads, iPhones, stuff like that. We do have that good trend line, 90-day moving average play, 35 on the RSI. So I know historically that's a very undervalued spot for Apple. And if we do get sell off, very similar to Costco, we can just add more to our position and move this thing to our long-term portfolio. Not even worry about it. So with stop loss, will my shares be sold once the price hits that price or goes below it? Yeah, so a stop loss is the max amount of money you're willing to lose on a trade. So if it does hit that stop loss, so if that's just say you go, okay, we'll take a trade here, we'll put our stop loss. So the max amount of money I'm willing to lose on this trade is 2%, right? So here, so about here, we'll just say about there. And then our target up here, right? So this shows the risk and reward, and then the stop loss is that max amount of money I'm willing to lose. So if this stock there's several ways. So if this stock does sell off, you'll get stopped out, when that stock hits your stop price. Yeah. So but I mean, as far as stocks here with opportunity goes, I do think we've seen, some good volatility like ADMA. This stock I knew I should have bought, and I feel like I've been saying that, and I've been just not holding off, but it was a perfect play, right? Sold off, huge trend line support, hit that support line, good risk and reward, stock popped up, excellent. PRC, very similar thing other than the earnings here. Even sold off, we were looking at that 90-day moving average play. But often, since this stock squeezed up so much so quick, it does carry a little more risk there. ASPN here, this stock's just been selling off down below this 90-day moving average line. So now the approach here is waiting for some sort of breakout or something along those lines, REGM. How do you think NVIDIA stock will be with the upcoming graphics card coming out in the next few months? So NVIDIA, I think NVIDIA does carry obviously a lot of potential. I think it's already proven that. But on the flip side, the stock has gone up, 150% this year, 200% the previous year. So I just think that with the stock being up so much so quick, you have to have a little defense with your shares of NVIDIA. So for me, I keep it under 5% of my portfolio. So if you have $100, you keep NVIDIA under $5 of your total portfolio. What that does is it limits the downside, obviously, because it sells off. You only have $5. But if you dollar cost average it, so if you invest consistently rather than just dumping in a bunch of money, I do think that you can use the sell-off to your advantage like normal. But I do think NVIDIA, yeah, I think this, right here, yeah. So I mean, we've seen, it was approaching all-time highs. So for me to enter would be like from 115 to 122, right in that range. We'll throw an alert there actually. Why the 90-day moving average line? Why not the standard 20, 50, or 200? So I do use the 200, which is the red one. Obviously, if I could take a trade on the 200 every time, I would, because it's going to be a harder support than the 90. Than that. And then for the 50, I mean, I will occasionally pull it up. I just personally have used the 90. I've used it for years now, and it just worked well, right? I found something that I like, that I understand, and it just works well. Same with the 20. I mean, the issue with the 20 is sometimes here. Let's pull it up. Where are we at? Nope. Sorry. Hold on, everyone. So the issue with the 20 sometimes is the support strength isn't as strong, So, yes, you can find some good entries on some dips, but general, really doesn't have good support strength there. So for me, I've always just found that the 90 works well. And yeah, if you don't have funds, don't trade Nvidia. Yes, it's risky, of course. So yeah, for me with this stock, I would like to get more sell off on this trend right here down to like that one. I probably would start picking up shares at the 122 range. Average down to 114 if it hits that trend line with an average cost of 119. Stops at 110 for a push up. Yeah, that's the approach I would have. And if you guys are watching, make sure you guys hit that like button and subscribe here. I see we're at 2 likes with 6 viewers. So come on, you guys got to like. You guys got to. And don't forget to check out our school code Halloween, 50% off. Today is the last day for that sale, so check out that. Also, guys, since everybody is here, we are doing a giveaway here for our. Let me see. So, for our trading journal. Now, how you guys enter is you guys have to be subscribed to our media channel. For those of you that don't know, my wife and I have so many tabs on my computer up. My wife and I started a YouTube channel for digital media, pretty much how to make money online. So make sure you guys subscribe to it, and then we're going to be picking one of you guys every week and sending you guys a trading book. We're also going to be making a media book where you guys can learn how to make money online. So make sure you guys subscribe to that. We're at 7 subscribers, and if you guys subscribe, like I said, you guys will be entered in, with that. So check out that right in the comments here. But yeah, I mean, other than that here, I really appreciate your input on this. I just started, and your information has been extremely helpful. Sorry for all the questions. No, my job for you guys is for you guys to ask me questions. I've been swing trading now for 6 years, actually going on 7 years at the end of November. So, with 99% of you, I'm going to have more experience. I'm just going to have more time in the market. So ask questions, voice concerns. That's why I go live. So I do appreciate that. That does mean the world to me. And subscribe, check out our channel, and we'll be doing the giveaway here probably this weekend, where you guys can get a hard copy trading journal. So, but yeah, guys, we'll end it here. A lot of the stocks that are on the opportunity tab are going to be these same stocks that are on the one that I sent out earlier this week. So I didn't really add much. It's more of just finding plays, other than the Costco and Apple stocks. So, is it best to wake up at 6 a.m. when the market opens, or is it not necessary for swing trading? I mean, you don't have to. I mean, I tend to see, my issue is I tend to stay up too late and then wake up too early and then not get enough sleep. But you don't have to wake up at 6 a.m. No. Swing trading, that's the great thing about it, is there's a lot more flexibility with it, and you don't have to be glued to your computer. I am just because I'm constantly making content. I'm constant, that's just who I am. I try to treat this as much as I can to a job. I know, like, people on YouTube and TikTok, they say, oh, swing trading is, you can buy a stock and not worry about it. And yeah, I've done that. That's how I made that transition from my full-time job to, a swing trader. And now that I'm a swing trader, I might as well be at my computer and swing trading and looking for plays and not just sitting, driving around in my Ferrari. No, I'm just kidding. My Ford Fusion. But, so guys, I hope you guys all enjoyed today's live. If you guys did, like, subscribe, and I do appreciate you guys hanging out with us today. And we'll end it here. And we'll probably go live this weekend because I enjoy going live over making, other videos just because I feel like people can ask questions more, voice concern.